Hi guys, take two at recording this. My mic was literally across the room when I was recording this, but I got the background white for y'all, or I mean black for y'all, so it's gonna show up a little better. So in this video, I'm gonna go over my specific trading strategy. I'm gonna go over how to create your trading plan. You could have this on a piece of paper in front of your desk every single morning to keep you in check and make sure you're following your rules. And then I'm also going to go over my daily buys today. So I'm going to tell you all my strategy, how I trade, my rules, and my trading plan. And I'm going to break down what kind of trades you could have taken today or not taken today. Today I end up taking no trades, but I'm going to go over what I was looking for based off my strategy. And then I can also go back to yesterday or back to Friday when I took a trade and show you all that as well. So let's get into this. Let me not hold y'all up. Make myself a little smaller. Okay. All right. Let's get into this. So first things first, let's do trading plan. I'll move my computer over. Trading plan or strategy. So I have two specific strategies: order flow, and like reversals. So what qualifies as a reversal? High time frame liquidity being taken out or imbalances. And then order flow trades are like lower time frame liquidity or imbalances. This will make more sense. So for the order flow part, it's normally like 15-minute, 5-minute liquidity or imbalances with then 1 minute confirmation, right? And then for this one, it's 1 hour and 4 hour with 5, maybe 1 minute con. Sometimes 5, sometimes 1 minute. This one is a higher RR for me, and then this one is more in that 1.5 to 2 RR. So, Caden, what do you mean by imbalances or liquidity? What do you mean by this? So, if you haven't studied that yet, I'm just going to give you a little simple rundown of that. Liquidity rests above highs, so there would be liquidity up here. Oh, make that white. There would be liquidity above this high, and basically I'd wait if this was my DOL, my draw on liquidity that I wanted down here, this low, let's say it's a London lows, I would then wait for price to take liquidity, and I need it to show me that orders were filled. So maybe like 5-minute down candle off that, 5-minute retrace, respect bearish movement, something like this, and then with respection to the downside, and then I would be willing to take a trade, right? Oh shoot. Let me just delete this. Okay, so I will go more into this on the charts, what I mean by order flow. But order flow is, this one's normally same direction. Like I'm going with the flow. So like if the 5 minutes bullish, I'm taking longs, right? I'm following the flow. Or if the 15-minute is bullish and the 5-minute is bearish, that's my retrace, and then I'm going to take higher, right, with order flow. But reversals, flowing like this, and I'm wanting to take the first inverse to the upside, right? So I'm catching the trade down here in this area. Instead of order flow, I would catch it like here to here, right? If this was the target. So order flow, basically, this just allows me to have more entries. Like if market open and we don't sweep out anything, and I need some kind of sweep of some sort, like I need a 5-minute gap, a 15-minute gap. I need price to be within something to then react to my draw on liquidity. I know this is probably extremely confusing right now. Like I'm probably going off the walls, but hopefully y'all have some background in liquidity and imbalances and how the 5-minute, 15-minute move, 1 hour moves, and that sort of thing. Otherwise, this is just going to be confusing. I'm not going to break that deep into it. I'm not going to make that low of videos. I think if y'all are watching my content and you've been in the trading space for as long as most of y'all probably have, you probably understand what I'm talking about. So how I find my bias. So this is my trading strategy. Like, this is the strategy I use. Okay. I'm very discretional with it. Like, there'll be a setup like, oh yeah, 5 minute perfectly filled this. Let's go higher. But like, I don't always take that trade. There has to be other factors at play here. Because like, if you just traded order flow or you just traded reversals, you'd be like, oh, liquidity got swept, break a structure, enter. Oh, 5 minute gap got touching, enter. Like, if you did that every single time, you would have a horrible win rate and probably wouldn't even be profitable. So the biggest key, the only reason this works is because I've said before, draw on liquidity is the most important. You need to study data highs. Watch those, which are form or lows, right? Data highs or lows. Session highs or lows. Equal highs or lows. New week opening gap. New day opening gap. Just higher time frame in general. And then, you pair, but like, look, these are like base hits, right? But then like pair a new week opening gap with a good draw on liquidity makes it better, right? Like, the more of these stacking in an area, the better that idea trade is. Like, if you got equal highs and the high time frames bullish and we're all pushing towards it and you got equal highs, I mean, that is a solid setup. That's basically what we had today. Say you have like a new week opening gap and we're in a bearish 1 hour gap, like in the new week opening gaps below us. Like, that makes it 10 times better, right? So this is something you're just going to have to study as you continue to put work in. Like, this is the key, in my opinion, to profitability. I'll make the claim, I think drawing liquidity is the most important factor in everyone's trading. If you don't have like a target that you're targeting, I don't like strategies that are like, oh, I'm going to target 30 points and like this. I don't like that. That just doesn't, that's just dumb to me. Like, just targeting set RRs is dumb to me. If your drawing liquidity makes it a 2.3, why aren't you holding to that? That is the whole reason you entered the trade. Like, I'm entering the trade more based on drawing liquidity than what I'm seeing in the market. And I know that sounds crazy, but this is what keeps me out of certain setups. Because like, I'm like, okay, this draw is definitely higher. And honestly, I don't see anything really that good to the downside. I don't really see any reason for us to go lower. But like, price keeps going lower. And then, we never really, like, I'm not going to take this breaking structure to the downside when this is my target up here. I'm just not taking that. I'm just going to let price do its thing until basically at some point it tells me, hey, we want to go up. And that, obviously, that's going to depend, but like, that's kind of how I do it. And then also, like, I have other parameters. So now this is where, like, this is the part that keeps me in check, right? So drawing liquidity, that's extremely important. This is what has brought my win rate up. This is something you're literally just going to have to stare at the markets for hours on end to learn. You have to show up every single morning and be like, and you need to ask, like, why did market take out that high? Why did market target this? Why did market do this? What was the reason behind it? And then look at it and be like, okay, yeah, there was data highs up here. Oh yeah, there was equal highs up here. Oh, this is all-time highs. Oh, this is London high, Asia high, London low, like Asia low. There's all kinds of draws. You just got to figure out which one's important. You're like, oh, why did price wanted to sweep out? Like, say your DOL's higher, but you got equal lows below you. You should probably wait for them equal lows to get taken before you target your DOL. It's just little simple things like this that you pick up over time, or you just fade the trade because you were like, okay, like, equal lows are high probability. I'm not going to take a trade against them. So if price wants to just rip up higher and take out the draw, then I'm okay with that. And that was kind of the reason why I didn't take a trade today. But now let's go into my trading plan and how you can create this for yourself. Trading, let me write this one out. Oh. Trading plan here. Let's scroll over here. And I want y'all to write this down and formulate this for yourself. You should also like write out your strategy, but like, I'm not robotic with my strategy. I'll tell you that right now. I'm very discretional, and I've said this. The biggest thing is I need to have three things, and this is where this trading plan comes in. So I have three like things that need to be filled. DOL. That's number one. That's my number one most important thing. If there's not a good DOL that I'm targeting, why am I taking the trade? I will just sit off for the day. I would rather not trade. Because a good DOL will, like, you could have a good DOL, no strategy would be higher probability than good strategy, no DOL. Right? So draw on liquidity. Basically just like draw in general. It doesn't even have to be liquidity. Like imbalances, count towards liquidity, but you know what I'm saying. Draw on liquidity. One trade. Only take one trade a day. This just keeps me from over-risking, over-leveraging, whatever. Mentally, it just keeps it simple for me. I can only take one trade, but doesn't mean I have to take one trade. It just means I'm maxed out at one trade. So one trade max. Ooh. This, in general, helps me because normally when I take that second trade, it's a higher probability of it losing. One trade max, and then at least 3 confluences. Okay, this is my trading plan. I need to have 3 reasons why I'm entering. Right? Say it's like swept 15-minute low, bang. Rejection off it, 1 minute, break structure upside, bang, that's 2. Good DOL to the upside. That's 3. Willing to take that trade. You know, that kind of setup right there. This is it. This is all I have. This is the only rules that I follow. Obviously, you know, I got my own risk stuff, but that's not, I don't need to fall into my trading plan. Like, I know my risks for the day. But if y'all struggle with risks and you over risk some days and whatever, like write out, have ChatGPT make you like whatever your risk is, 300 or 500, whatever it is, have it create a stop loss generator for those set stop losses to where you're not entering with wrong contract size. But I've traded long enough to where like I know, okay, 40 point stop, bang, I'm gonna enter with this 60 point, 70 point, 80 point, whatever. I know my entries. And then also one more thing, I guess this is kind of like a side piece, but it's not actually on my trading plan. The RR needs to make sense. Like I'm not gonna take a negative RR. Like even if I know it's a DOL and like there's like basically a like almost like a 90% win rate, like we're so close to it, like I know we're gonna get there. And there's like an IFVG, but like if my stop loss has to be like here and that's my target, I'm not taking that trade. It has to be at least a 1-to-1 for me to take it. I'm not taking anything under a 1-to-1. It's not worth the risk to me. I'll just wait and take a trade tomorrow. So those are my rules. This is what keeps me in check. And now let's kind of show you kind of how my brain works in the market with this. Remove drawings. I'm going to go back to white. Or maybe I'll do like gray. Maybe that shows up a little better. Maybe gray shows up a little better, does it? Maybe. When I drop this, do y'all see that better? Okay, I think gray is going to work better. We can even do like light gray. There we go. Let's do that. Okay. So we have the market today, right? Go to the 5-minute. First thing I do, this is, you can count this as my rules. I mark out 9:30 and I mark out 9:50. Is that showing up good? Okay, that's showing up decent. So I have those marked out, right? At market open. And then I go to the 1 hour and the 4 hour and I kind of just like look at the overall how price is moving. And what I see here is we have equal highs on 4 hour, right? Which is a good draw. And then also at market open, we were inside of this gap. So we could reject lower. And then on the 1 hour, we have this new week opening gap here. So I mark out the top of it. And then we had this low. So this is kind of what I was working with here. And I was like, okay. And let me go back to the double screen here. Let me fix this so it matches. One more darker. Okay. So on ES here, same thing. I mark out 9:30, 9:50. Oh, goodness, bro. The shorts I wanted all day are about to play out. I wanted it to come down to this new week opening gap. This was my main draw on liquidity for the day. This is what I really wanted. I knew all-time highs had potential. I mean, they always do, but like just with how low ES was. Oh, that's a trade, bro. Oh gosh, new week opening gap. I think ES is definitely gonna take that out. But oh, that looks good. All right, let me go into my buys here though. So we swept out this low on ES, which was this low all the way down here on NQ. Off rip, and NQ was obviously, as you can see here, leading index. So I like this SMT we were forming. I really did. But ES just barely, as you can see here, wicked this out. Just barely went below here. So I was like, okay, if it's just, I didn't like that in my opinion, because I was like, okay, I feel like there's a high probability that it's going to want to go a little bit lower. Like I didn't think that was a good enough wick to actually confirm that that was low a day and then we're going to go high, right? And also NQ failed to take out this low. I know, I think this is called like a rejection block here. I haven't studied it and implemented it in my trading, but I know Powell definitely took longs right here probably off this candle. Especially retap into it. He took longs there. But so when ES swept this out, NQ didn't even sweep out this low, which was up here on ES, forming an SMT. I marked out this fair value gap here. And like, see, we were inside this 4-hour gap, came up, and then we were rejecting out of it. So I thought we were going to push lower. So what I was waiting for, I personally wanted a 5-minute retrace on NQ to then go higher, or even a, using this tool 50% to then go low, like to continue lower. So I did want price to come up and then break back structure to the downside, and I was going to target, like ideally I wanted price to come up and then let's say inverse this, and then I was going to take shorts. And the reason I didn't take longs is because ES just barely swept out this low, and I thought ES was going to come up, take out this 1 minute high, and then just dump lower. So that's kind of what was going through my head. But you go to the 1 minute. The trade I would have taken if I didn't think that we wanted to go lower and I really thought this was the SMT, this is the trade. I would want this IFVG to the downside to get destroyed. So this would have been my entry. I'd have put stops at these lows, and target would have been all-time highs here. And as you can see, that would have absolutely printed. It would have slammed. But this is not the trade I've taken. This would be, I would consider this more order flow, because like theoretically we tapped into this 1 hour gap that we already tapped into. We just tapped into it again. And then we started displacing higher. Even though the 5 minute was bearish, I would consider this a reversal type of trade, right? Because we're going against the 5 minute. But then I would consider this trade here. I thought about taking this. We come down into the 5 minute, and then we inverse this gap. I was going to take this, too. I was looking at it, and I was like, this is definitely going to play out. But the RR on this was horrendous. I mean, what to call it? A 0.25? It's just not something I'm taking. But what I really wanted was this to flood the face. And then I basically wanted price to come up, retrace, inverse this gap here. And then I wanted shorts, wherever the high would have been, to, I wanted shorts all the way down here. I wanted shorts all the way to that new week opening gap. It's kind of what I was wanting. But as you can see now, we're starting to dump off. I could see us just flooding it for PM session. But that's kind of like the strat that I use. I don't know if I explained that well enough. I feel like today was kind of confusing. Let's go to Friday so I can give you all just one more example. Let's mark out Friday. Ooh. Let's see if I even remember what trade I took. Oh, I remember what I took on Friday. I wanted this low all the way down here. And so price comes up on Friday. Let me just go to the 1 minute. Friday, market open. Let me mark out market open. Let me go full screen here so it's easy to see. So Friday comes up, right? It comes up, sweeps out this high here. And then I got displacement, and I took this break of structure here. Stops for here. And my first TP was here. I'm pretty sure. Yeah. Oh my goodness. This is the trade, and I end up getting break even stopped here. This is the trade I took on Friday. And I was like, bang, came up, went short, and got break even stopped, which was just unfortunate. But as you can see, liquidity got swept, displacement, 5 minute retrace into fair value gap, displacement again on the 1 minute, enough to enter a good DOL, didn't get taken out. But as you can see, this is the trade I wanted for today. It was this huge gap here that we had. I wanted this to get filled today. But price had other plans to rip. All right, guys, I'm going to end the video right there. I'm going to go to the gym. Hopefully this helps. Hopefully I wasn't just rambling out of my mind a little too much. If there's anything else that's still confusing, let me know. I'll try to make more in-depth videos, but this is kind of, this is the exact strategy I use, order flow, whether I'm taking on the 5 minute or 15 minute. I would say like the biggest thing to really focus on is just like understanding draws on liquidity. I know I've said this plenty of times, but that's the biggest thing that changed my trading strategy. And then one more thing I've told y'all about also is like motion. I like to see motion in the markets. Like I don't like to see, for example, let's say oh, that's a little off screen. So say there's like a fair value gap here and price is, and then finally it closes above. That's not good to me. I don't like that. I don't like price hesitating, right? Like say I want draw up here. I don't want price to hesitate through this. I want it to bang through it, one candle, rippage. Those are the ones I like. Even though my stops normally have to be bigger, they just seem to have higher win rate to where it doesn't matter that the stop's bigger. It literally just makes more money. Same thing with break of structures. Say you have a high here, and you're waiting until price to break. I don't want it to then close above it. No, I don't like that. I want price to boom, disrespect it, act like it's not even there, and then I'm going to take that to go higher. So basically all I do, guys, is I get my bias, I get my draw and liquidity. I need to see some kind of liquidity or imbalance get tapped into. Like I need price to be somewhere to then react towards my draw and liquidity, right? Whether that's on the 5 minute, 15 minute, 1 hour, or 4 hour, it doesn't really matter to me. If it's on a higher time frame, normally I wait for a 5 minute close towards my draw and then a 5 minute candle back up to then find, entries lower or higher depending on, what direction it's moving. Like if it's like 4 hour, 1 hour, I wait for a little more confirmation on a slightly higher time frame like the 5 minute. But honestly, in general, guys, this market's been moving extremely fast. So the only confirmation I use is IFVG or break of structure. That's all I need. Ideally, I need, the 1 minute to then flip towards my draw, whether it's through this or this, but it needs to be good. But for the most part, guys, I've been purely focusing on IFVGs for the most part. It's been like my biggest entry model, and it has been printing for me. So I prefer IFVGs, but if a break of structure is what I have to use, normally during those retracements is when I get the break of structure entries. But all right, guys. Oh, that's going to be it for today. That's going to be the video. Oh, my goodness. I'm about to slam some caffeine, go to the gym, and get a nasty pump going. So, y'all have a blessed one. Hopefully this video helps. Continue working, continue putting in the work, and let's get after it.